Hey everyone, welcome back to the channel. If you've been following the crypto space closely, you already know that X Empire has finally listed on major exchanges like Binance, KuCoin, OKX, and more. But instead of excitement, I've noticed a lot of disappointment and frustration from many of you about the listing price. So, what went wrong? Why isn't the price living up to expectations? And most importantly, what can you do to turn this into an opportunity instead of a setback? In today's video, we're going to dive deep into the factors behind X Empire's initial price, why it's completely normal for tokens to start out this way, and how savvy traders and holders can maximize their gains even when things don't look so good at the start. If you've been involved in projects like Hamster Kombat or others, you'll know that this isn't the first time a token has listed at a lower than expected price, so don't panic. I'm going to break it all down for you. What influences these early prices, how to navigate the post-listing volatility using trading tools, and why holding onto your tokens could be your best move yet. Plus, we'll look at some real-life examples of projects that started with low prices but went on to skyrocket in value. So stick around, because by the end of this video, you'll have a clear game plan on how to approach situations like this, and maybe even turn a disappointment into a win. Let's start by addressing what many of you have been thinking. There were huge expectations for X Empire's listing price. I saw a lot of excitement building up in the community. People were hoping for a big launch, with the token immediately skyrocketing in value. But now that it's actually listed, it seems like the reality has left many feeling a bit disappointed. But here's the real question: was this really unexpected? If you've been following my channel, you might remember the video I posted earlier on how to calculate the price of the X Empire coin before its listing. We broke it all down, looking at the key factors that usually influence a token's initial price at launch, and it's important to revisit those now. Market demand. First and foremost, price is driven by demand. If there's a lot of hype and a rush to buy, the price tends to shoot up. But if the market is flooded with early holders who want to cash out immediately, like people who receive tokens in pre-sales or airdrops, that creates a lot of selling pressure. And what happens when there's more selling than buying? The price drops. Initial circulating supply. Another key factor is the initial circulating supply. Many tokens, including X Empire, allocate a large percentage of their supply to pre-sale investors, airdrops, or early participants. When these tokens get unlocked and hit the market, the supply outpaces demand, leading to lower prices. Trading volume. Lastly, we have trading volume. If the trading volume is low after listing, the price can remain stagnant or even decrease. This is where market conditions and overall sentiment about the project come into play. If traders are holding back or if there's not enough buzz, it affects how quickly the price can rise. In X Empire's case, the volume was decent but couldn't outmatch the selling pressure. So, when you factor in all of these things, market demand, circulating supply, and trading volume, it becomes clear why the listing price might not have hit the high notes some people were expecting. And that leads us to the bigger picture. Should this really be a surprise? Now, let's zoom out a bit and talk about expectations versus reality in crypto. If you've been in the space long enough, you'll know that this isn't the first time we've seen this happen. In fact, if you were part of the Hamster Kombat launch, you probably had déjà vu when you saw X Empire's price today. Hamster Kombat is a great example of how a token can start with what seems like a low value but still gain significant traction over time. When it first listed, there was similar feelings of disappointment. People thought it wasn't worth much and even considered selling early. But look what happened. Over time, as the project developed, the community grew, and more features were released, the token's value started climbing. The early dip in price was just a part of the market adjusting to initial supply and demand. This pattern isn't unique to Hamster Kombat, either. We've seen it in countless projects, tokens that start with low prices but later rise as the project matures, more investors get involved, and real use cases start rolling out. Take Axie Infinity, for instance. It started small, but as its ecosystem grew and the play-to-earn model exploded, the price surged. What this means for X Empire: the same potential exists for X Empire. Sure, the price didn't launch as high as some had hoped, but that doesn't mean the project is doomed. Early disappointment is common, but it doesn't dictate the long-term value of a token. As X Empire continues to roll out features, build partnerships, and expand its ecosystem, there's a good chance the token's price will reflect that growth over time. So, rather than reacting based on day one prices, it's essential to think about the long game. Just because a token starts low doesn't mean it's going to stay there. Projects like X Empire go through extensive token distribution processes before listing, which affects the initial price. Large pre-sale or airdrop participants might start selling immediately to lock in early profits, driving the price down. It's a common trend across the crypto space. Remember how Hamster Kombat had a similar price dip? Initial listing prices are influenced by market sentiment, distribution volumes, and token unlock periods. But over time, these tokens can recover and even surge in value. Now that we've broken down what's happening with the X Empire token listing, the next question on everyone's mind is, what should you do? Should you hold on to your tokens, try to trade the volatility, or sell and cut your losses? Let's dive into 3 key strategies that can help you navigate this situation and maximize your returns. Strategy 1: Hold for long-term gains. First up is a strategy that many seasoned investors swear by: holding. In the crypto space, we've seen time and time again that focusing on the long-term potential rather than day one prices can be highly rewarding. Even though the initial listing price might feel like a letdown, the token's value can climb as more use cases, partnerships, and ecosystem growth take place. Take projects like Ethereum, Solana, and Axie Infinity, for example. These projects didn't start off with sky-high prices either. In fact, Ethereum's price in 2015 was under $1. Solana was trading at less than $1 in 2020. Even Axie Infinity, which is now a household name in the play-to-earn space, started at just a few cents. But holders who were patient and believed in the project saw massive gains over time. Ethereum went on to surpass $4,000 at its peak, Solana hit over $200, and Axie Infinity saw a similar explosion in value. So if you're confident in X Empire's long-term vision, holding might be your best bet. As the project grows, releases more features, and attracts a larger community, the price could reflect that in the long run. Strategy 2: Use available trading tools. Next, let's talk about short-term trading strategies for those of you who prefer to capitalize on market volatility. If you're not interested in holding long-term, there are several ways to make smart moves in the short term using advanced trading tools. One of the key tools to consider is stop-loss orders. This feature allows you to automatically sell your tokens if the price drops to a certain point, helping you prevent massive losses during market dips. For example, if X Empire starts to decline in price after the listing, you can set a stop-loss to ensure you don't lose more than you're comfortable with. Another great tool is limit orders. Instead of constantly monitoring the price, you can set a limit order to buy or sell once the price hits a specific target. This way, if the token hits a price you're comfortable with, your trade will be executed without needing to watch the market 24/7. If you're in it for the long term but want to avoid buying in all at once, you might also consider dollar cost averaging, DCA. This involves buying tokens at regular intervals, regardless of price, to spread out your risk. Over time, DCA can help smooth out the volatility and lower your average cost per token. Platforms like Binance, KuCoin, and OKX all offer these advanced trading features. Using tools like stop-loss and limit orders can help you maximize returns while reducing risks, especially during the early volatile days after a token's listing. Strategy 3: Diversify and participate in multiple projects. Lastly, let's talk about the power of diversification. One of the key lessons from projects like X Empire, Hamster Kombat, and others is that you shouldn't put all your eggs in one basket. Relying on a single project to deliver massive profits is risky, especially when the market can be so unpredictable. By participating in many different projects, collecting small tokens from airdrops, pre-sales, or staking, and holding onto them, you increase your chances of striking gold. You don't need every project to succeed. Just one needs to take off for you to see significant gains. We've seen real-life examples of people who participated in multiple token airdrops and pre-sales. While many of these tokens didn't perform well initially, some went on to deliver huge returns. Look at projects like Uniswap, Uni, or even early adopters of PancakeSwap, Cake. People who collected tokens early and held on through the ups and downs were able to cash out big when the projects finally gained momentum. The key takeaway here is don't rely on one token. Spread your investments across multiple promising projects. Even if X Empire's listing price isn't what you hoped for, there's always the chance that another project you're involved in will skyrocket. Diversifying reduces your overall risk and increases your chances of hitting that one project that really takes off. At the end of the day, whether you choose to hold, trade, or diversify, the key is to have a clear strategy. Don't let early price dips discourage you. Remember, the crypto market is volatile, and it's the long game that often rewards the most patient and strategic players. Use the tools available to you on platforms like Binance, KuCoin, and OKX to navigate the volatility, and always look for opportunities in multiple projects to maximize your earning potential. Remember, in crypto, patience often pays off. Don't let the listing price discourage you from the bigger picture. Whether you choose to hold or use trading tools to navigate the market, the key is staying informed and not letting emotions take over. If you found this video helpful, make sure to like and subscribe for more updates on X Empire and other crypto projects. Let me know in the comments what your strategy is: holding, trading, or selling. And as always, I'll see you in the next one.